Hello everyone, welcome back to my channel, and today I've got a bit of a different video. So today I'm going to run through what stocks to look into to recession proof your portfolio. Now if you've been in the market the last few weeks, you'll know what's been going on, and there is talks of a possible recession happening in America, so I thought this would be the perfect time to make this video. And then I'll give you some example of the stocks that you could be buying. But please note that this is not financial advice, and this information is for information and entertainment purposes only. So please don't go and buy any stock off the back of this video without doing your own research. So what is a recession-proof stock? This is a stock that is believed to be economically resistant to the effects of a recession, and they are usually added to investment portfolios to safeguard the portfolio against times of economic decline. So the most recession-proof sectors tend to be consumer staples, utilities, healthcare and energy, because they are always in demand regardless of the economic cycle or the business cycle. Whilst they might not see actual appreciation during a recession, they are likely to see smaller declines than the market as a whole. With that in mind, let's jump into the first stock that I want to discuss, and that is Walmart, ticker WMT. If you don't know what Walmart is by now, it's a huge American company that operates in the retail, wholesale and e-commerce, and the operations are worldwide. So you'll know them for the supercenters, supermarkets, hypermarkets, and they also have discount stores and cash and carry stores. So basically anything you're ever going to need on a daily basis, you can go to a Walmart location and get, and that won't stop during a recession, because that's where people go to do the groceries. People can go there to get the prescriptions. Pretty key. If you're in the UK, it's effectively like Tesco and Asda. You can get anything you need on a daily basis there. So what makes this recession proof is it's a leading retailer of essential goods, and it benefits from consistent demand during recessions, and consumers often turn to discount retailers to make the budget go further, which normally bolsters Walmart sales in challenging times. As well as this, they're a huge company, so even during a recession they can benefit from economies of scale, which keeps the prices low for consumers, which keeps more consumers going there. So yeah, it's a nice good cycle. Recently, in the last year, Walmart performed really well. So it's up 40% in the last year, and for the future outlook of Walmart, it's going to continue to focus on low prices and growing its e-commerce position, and its ability to adapt to changing consumer behaviours and economic conditions supports a positive outlook for the company. And if we look at the forecast for Walmart, so it's currently sitting at $86 per share, and 32 analysts have predicted a low value of $70, a high value of $120, and an average value of $101. And out of the 32, we have 14 rating it a strong buy, 17 rating it a buy, and 1 rating it a hold. So overall, Walmart is a pretty good one for when it comes to a recession, and at the minute analysts think it's a strong buy. Moving on to another example of a recession proof stock, and this time we're going over to the energy industry. So we're going to look at Exxon Mobil Corporation, and this engages in the exploration and production of crude oil and natural gas in the United States, Canada, UK, Singapore, France and internationally. So why is an energy stock like Exxon recession proof? Energy remains a fundamental necessity, and with constant demand even during a recession or a slowdown of the economy, Exxon's integrated operations across the energy value chain provide stability and resilience against the market fluctuations. And as a major player in the energy sector, ExxonMobil continues to invest in both traditional and renewable energy sources. It's got a strong balance sheet and global operations, which positions it well to navigate various economic conditions. And for those that are interested, it is also quite a nice dividend paying stock. So over the last year they've remained stagnant, and they've actually only moved 0.5%. But if we look at the forecast from analysts, so we've got 17 analysis here on stock analysis, and the general consensus is a buy. So we have 2 strong buys, 8 buys, 7 holds and 1 sell. Now I don't know how long ago this analysis was done, but obviously the talk of an American recession has started growing, so that might change it. And the median price target for the next year is $130. Exxon is currently trading at $109 and it's got a low price target of $105 and a high price target of $147. Moving on to my next example of a recession-proof stock is Costco, ticker COST. So if you don't know what Costco is, it is a wholesale company that now operates internationally around the world. I'm still need to remember to get my card, actually. I've been saying it for months now. But yeah, basically they get a lot of branded and private label products and they sell them in bulk, and they also sell a lot of necessities in bulk, such as dry groceries, meats, frozen food, your toiletries, your domestic stuff, plenty of furniture. Basically they sell everything, and everyone loves a good Costco trip. So what makes Costco recession proof? It operates with a membership based model, so the annual membership fees provide a steady revenue stream for Costco. They have bulk purchasing, so it focuses on bulk sales, which appeals to cost conscious consumers, especially during economic downturns. COVID, crazy, everyone just bought everything in bulk. Same happens during a recession. And they sell essential goods, so the product includes essential items such as groceries and household supplies, like I mentioned before, which ensure consistent demand even during economic struggles. So how have they been performing recently? In the last year, they're up 26% in their recent earnings. They missed their earnings per share expectation, but it was still $4 per share. And if we look at the analyst forecasts, so we can see there that Costco is currently at $927 over the next 12 months. We have 10 strong buys, 8 buys and 8 hold ratings from analysts, and it has an average price target of $1,030 with a low of $890 and a high of $1,175. So whilst this is recession proof, it also has a strong future ahead. So moving on to the next stock that can be classed as recession proof is a healthcare stock, and that is Johnson & Johnson, ticker JNJ. And Johnson engages in research and development, the manufacture of and sale of products in the healthcare field. It operates in 2 segments, which is innovative medicine and medtech. So they are quite a big company globally. What makes them recession proof is they cater to essential healthcare needs and ensure consistent demand regardless of economic conditions. So everyone everywhere is always going to need healthcare, so that's not going to go away. And they also have household name products and a strong brand reputation, which means people will look to that during hard times. So over the last year, they're only up 1.1%, but the future outlook is good for sustained growth because they have a diversified portfolio across pharmaceuticals, medical devices and consumer health products, and it has a strong track record of earnings and stable dividend payouts, making it appealing to conservative investors. So if we look at the analyst forecasts for the next year, so we can see Johnson is currently at $162 per share, and from 16 analysts we have 3 strong buy ratings, 5 buy ratings and 9 rating it at a hold. Price forecast, we see an average increase to $170, which is a 4% upside, with highs of $215, a low of $150. So yeah, quite a stable stock for the next year, and if you're looking for something to keep you ticking over during a recession with minimized risk, this is definitely one of the stocks I would be researching. The last example of a recession proof stock that I want to highlight is a very familiar company to most people, which is Coca Cola, ticker KO. So what makes Coca Cola recession proof is the fact that it's classed as an affordable luxury that consumers continue to purchase during economic downturns, and for a lot of people it is a staple of their life now. A lot of people think they can't go without a Diet Coke or a Coke Zero, and obviously Coke's got a lot of brands. It's not just one brand. You'll be buying products that you don't even realise are owned by Coca Cola. And then its extensive distribution network and brand recognition enhances its resilience to a recession. And the companies like Coke and Pepsi focus on essential products and services, which has the ability to adapt to changing market conditions, whether that's up or down. If we look at the performance year to date, they're up 13% year to date alone. And the future outlook for Coca Cola is that they're expected to drive sustained revenue as it focuses on cost management and innovation. And also they're looking to include healthier beverage options, as that is a growing market and is being pushed by governments. So if we look at their forecasts over the next year, so they're currently sitting at $68 per share when I'm recording this, and they have a strong buy rating out of 17 analysts, 8 strong buys, 8 buys and 1 hold, with an average price target of $74, a high of 80, a low of 69. So analysts think that it's only going to move up in the next 12 months, and for those interested, it is also a dividend paying stock, so they have a yield of around 3%, and they grow comfortably every year, that dividend growth, with 63 years of continuous dividend growth. So yeah, that's another example, and that rounds up this video. So that was 5 examples of what a recession-proof stock could be. Obviously this is not advice. If you like to look at these companies, go and do your own research into them before investing, and let me know what you think below. Do you really think a recession-proof stock exists, or what do you think? Just let me know. Leave a like if you've enjoyed, comment any feedback or any suggestions, and subscribe for more videos like this, and I'll see you in the next one.